trading is not a 100% win. It's not something you always apply and it will work. No, sometimes it do fail. We just use the previous trend with the previous experience to analyze the current market. Okay, you can also form your own. Like I said earlier, you can also form your own. You can just sit down, watch your charts. If you have, let me say, two devices, that's when you enjoy using it. Maybe if you are chatting with your other phone, have laptop or desktop in your front. Just keep watching at the charts. Scroll from one chart to another one. That's what I'm trying to say. Scroll from this chart to another one. It will gain you, like, you gain more experience than before. And you see some stories. Like I said, the chart give us stories, okay? It just give us the previous story. So you are the one that to say, okay, this is what this chart is trying to say. You interpret it with the knowledge of the technical analysis and then with the knowledge of what you have before. You know what I'm trying to say. So this trading strategy is just like a guide to you guys, on, let me say, technical analysis. Okay. So now, in our previous class, I was able to explain three trading strategies, which by now I know if you are smart enough, you should, let me say, notice this or use this in your trading, what's it called, charts. You know what I'm trying to say. So today we'll continue from where we stop, which is trading strategy 4. Okay. So what we have here is uh they say in the above chart we can see a pattern which has not been completed. Okay, they say we can see a chart which has not been completed. They are talking about this here. They are talking about this. You see, we have triangle. We have triangle here. It's just similar to that. Is it trading strategy 2, which is what's it called? Symmetrical continuous triangle. You know what I'm trying to say. But this triangle here is not complete. You see, triangle is a form of triangle, but it's not complete. This is what I'm trying to say here. You see, the chart is here to close up these parts. So that means what is it called? It's not complete. That's what they're trying to say here. They say in this above chart, you can see a pattern which has not been complete. The pattern is yet to be complete. You know what I'm trying to say? This pattern is created when the price is in a downtrend. You see, that's why I explained trend from the beginning. By now, you should be able to identify downtrend or uptrend. That's what I'm trying to say. They say for you to notice or for you to use this strategy, the price has to be coming from a downtrend first. Then when it formed this kind of, what's it called? This kind of triangle. Like if you draw your lines, your necklines, or if you use, there are other features there in our trading view. When if you use them, you know what I'm trying to say. There are some shapes in our trading views. There are some tools in our trading view. You can just easily put them here. So if you put them here and it forms something in the form of triangle, and but not complete. That's when you use this strategy. You know what I'm trying to say. Number one, they said the trade has to be, let me say, the price must be in a downtrend. That's number one. Let's continue. Let's see. We can also call it a symmetrical continuous triangle. Like I said earlier, it's just similar to that one I explained earlier, which is this. Let me see. You see, look at it here. You see, look at this strategy too. And if you look at this is coming from an uptrend. This is coming from an uptrend, and you see this is coming, and the second one is coming from, what's it called, a downtrend. That's why I say you need to note some things. Okay, if you don't know those things, this slight mistake, you just makes a slight mistake. That's what I'm trying to say, and you just fumble. That's why you need to, let me see, note the key point. If I'm you now, I'll just find a pen. The key points are the main things there. You can just jot down the key points. Okay, you see, we can also call it a symmetrical continuous triangle. Whenever such pattern is formed, you can see a downside momentum. From the word downside momentum, that means we will always look for short in this particular strategy. That's what I'm trying to say. So then I say, now that this pattern is not complete here, we have to wait for the pattern to be completed. Like I said earlier, the pattern is yet to be completed. So we have to wait for it to complete before what? Taking our decision. And I say, when the pattern is complete, then we'll take a position here. See what I'm trying to say? Then I say, here, the price has broken the neckline. And anything we deal, let me say, in any strategy we're dealing with, you see that neckline is very, very important. You can't trade inside the neckline. No, you have to wait for the price to break out. That's why I said, what's it called? Trading need patience. Don't put that fear in you, that fear of missing out in you. and said you want to enter at any moment you like. No. Always set your entry. That's what I'm trying to say. Always set your entry. And if it miss your entry, don't say you want to enter. No. Leave it. That's what I'm trying to say. Just leave it. So they say here the price has broken the neckline. Here we can also see that the previous low break now. As soon as the price has broken the neckline, we will enter. So what they're trying to say is, number one, for it to be complete, you see, this is the incomplete one here. You see, this is the incomplete one here. So now the pattern is not complete. As you can see here, it has complete. So we have to wait for it to break this neckline for us to enter. That's what I'm trying to say. We have to wait for it to break this neckline before we enter. And before we enter, it's not before we enter, we have to wait for it to break the previous low. That's what I'm trying to say. It has to break the previous low. The previous low, if you are looking at this now, the previous low is this. You see this and this. I have to wait for it. You see the price now is below all this now. We have to wait for it to break those. If we break that, we can now enter. You know what I'm trying to say? Then I say here we can also place our stop loss as level 1 and also at level 2. But we will place our stop loss here at level, what's it called, 2. You see, they're telling you where to set your stop loss. Setting stop loss, I said, is very, very important, because if you don't know where to set your stop loss, you easily hit stop loss and the market will start going your own way. Because maybe it might retrace to that place, that point, just set stop loss and start going your own way. It might retest to that particular place you set stop loss. After hitting that place, it will now start bouncing back to your own way. That's why setting of stop loss is very, very important. You can't just find any point and set stop loss. No, find a reasonable place to set stop loss. That's what I'm trying to say. And the reason behind this is why they say they say here we can also place our stop loss at level 1 and also level 2. These are our level 1 and level 2. You know what I'm trying to say? Why did they say we should set our this thing at level 1 or level 2? If the price of this thing can break this particular one first and break this particular one, nothing like it won't go down again to start, because it has break the previous trend. It want to, let me say, the trade wants to start going in another trend, let me say an uptrend. If you can break this particular, what's it called, level, that's why they say you should stop your stop loss in this. So if you set your stop loss in this particular place, if you hit your stop loss and start going that other way, you have already, that's what you call risk management. Your trade has already closed, so that means you missed that particular, what's it called. So that's why I say setting stop loss is very, very important in terms of trading. So if you know where to set your stop loss, you can't just choose any point. Say, oh, let me set my stop loss here. No, you have to set a reasonable point. If someone asks you, why did you set this stop loss in this particular place, give him a concrete reason. That's what I'm trying to say. So that's it for this strategy 4. Okay, that's it for strategy 4. Let's move to strategy 5. They say in this chart, we can see a pattern which we also call flag bearish pattern. This particular pattern is called what? Flag what? Bearish. If you can see from this here, you see, let me see, something like a flag, just like a logo of a flag, but upside down. You know, flag is something like this with something like this. But this one, this time around, this one is upside down. That's why they say it's called what? Flag pattern. What's it called? Bearish pattern. You see, this one is something like this. This is a flag, something like this. That's how I'm going to see. And I say this type of pattern is formed in a downtrend. You see, they also tell you here. This one is also formed when there is a downtrend, then this pattern start forming. That's when you know this pattern is what's it called? A flag pattern. A bearish flag pattern. We have the bullish one, yeah. We have the bullish one that comes like this. You see it something like this. Then you now see something like this. You see, if you draw your necklines like this, this is the opposite of this. We have another one like this, but that particular one comes from an what? Uptrend. But this one is coming from what? And what's it called? Downtrend. You have two different ones. You also have to see. So then I say this type of pattern is formed in a downtrend. Now we have to enter here. We have to wait till the price would break out the what's it called, neckline. That's why I say the most important part is the neckline. That's what I'm trying to say. The most important part is the neckline. If you are not a scalper, that's what we call scalping, and I explained it earlier. If you are not a scalper, you have to wait for it to break. But if a scalper can particularly enter trade inside this neckline, because he trade, let me say, in minutes or in seconds. That's what I'm trying to say. He trades in what? Minutes or seconds. He can decide to enter in this particular place, and he will just wait for it, because you know this serve as support zone. You know what I'm trying to say. You just enter here, Then you wait for the price to, because you know if it hit this particular place, there will be a reversal to start going up small before it hit this water resistance. And then what do you call it? It's not greedy enough. When it just move up small, it will just close because he's a scalper. Now sometimes even scalping, you need knowledge for the scalping. I do scalp, yeah, I do scalp. Sometimes when I normally scalp is when I see a, let me see, a bullish momentum, like a high bullish momentum or high bearish momentum. You can see Bitcoin sometimes from let me give you an example. You can see Bitcoin sometimes from the rate of $40,000. In minutes, you see it at 44,000 or 43,000. Then definitely, if you see it on that particular, just know there will be a reversal, a quick reversal. Then you can use that particular time to scalp. If you're a scalper, so if I see it at that particular range, I don't need to analyze anything. Scalpers sometimes they don't need any analyzing. They just use their brain. In seconds, if you're using a huge capital, in seconds you can make $1,000. I promise you, using scalping. So in seconds, let me say when the price pump, maybe US, what's it called, release some news. I know if all those US or other countries like China or other places, if they release news, it normally what's it called affect the market. So let's say if it affect the market and pump it up, normally if news come out after some times, the trade will come back to normal. You understand what I'm trying to say? So let's say the BTC was at 40, then news now came up. You understand what I'm trying to say? Then after the news, it make the market to pump up. I know that after some time, it will definitely dump. So when it pump up, maybe in 1 minute, I will definitely what I will look for. I will not look for anything like long. I will look for anything like short because I know in some minutes or in some hours it will dump. That's what I'm trying to say. Then I will just enter. Maybe it's at $44,000. I'll just enter. In some minutes, it will drop to 43. I'll just close. And if you close, if you're a scalper, don't enter at that particular time again. If not, you will return your profit. If care is not taken, you will return your capital. Yeah, I'm saying it let me say from experience. Started trading now almost 6 to 7 years back now. So I'm saying things from experience, okay? I'm saying things from experience. So now let's continue. They say, okay, I've already, they say price has broken the neckline here. Okay, they're talking about this picture here now. They say price has broken this neckline here. Now let's make a sell position here in this type of pattern. They say this type of pattern will only make decision of what? Sell. A sell position. Now sometimes then we'll just have to wait for it to break out. If it breaks out, advisable, they don't say it's advisable. Always wait for the test. Please. Even this I forget to explain that here. If something breaks out from the neckline, always wait for the test. If you to retest, that's when you enter, please. Always wait for the test in any of these breaking out. You know, sometimes you wait for a retest. It's very, 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 very important because it might decide now when it starts going down like this, might decide to start coming up. So if you don't wait for any retest, it will keep going up. But let's say, for example, now you wait for the test and it start going up now. Maybe then later it start coming down like this. Then you can decide to enter this particular place that for the test and start coming. That means let me say 80% assurance. There's 80% assurance that it will come down if you see anything like a retest. You know what I'm trying to say. So that's it for strategy 5. As simple as that. Just note when it is coming from a downtrend, you wait for it to break out the neckline and wait for a retest. Then you enter. As simple as that. Then we go to what? Strategy 6. They say this type of pattern is formed after an upside or downside momentum, which we call consolidate. What was it called? Consolidation. That's what we call consolidation in cryptocurrency. If you hear anything like consolidation in cryptocurrency, we're talking about something that doesn't have direction. It might go up and it might come down. You saw sometimes it might go up and it might come down. That's what we call consolidation in cryptocurrency. As simple as that. Don't take the word as big word there that will confuse you. You know what I'm trying to say? They say this type of pattern is formed after an upside or downside momentum. You see that's what they say. They give two words: upside or downside momentum, which we call what? Consolidation. That's what I'm trying to say. Now they now say whenever such a pattern is formed in the chart, then we have to take the high and low of the horizontal line, which means add support and resistance and wait for the price to exist the horizontal line. Either the price will go down or else up. That's why we are talking about two things here now, they are not specified in this strategy. Other strategy, they will tell you that if it breaks out the neckline, we should look for short. They specify that we should definitely look for short in this type if we see this type of pattern. But in this type of pattern now, they are not telling you to look for short or to look for long. They are telling you to draw two lines, just like necklines, just draw two lines, support and resistance. You know what I'm trying to say? Then after drawing the two lines, where it first breaks out, because in what's it called, like I said earlier, consolidation, we don't know where the price is actually going. You know what I'm trying to say? It might go up and it might come down. So if you draw these two lines, which let me put an arrow. If you draw these two lines, let me see, this is our resistance and this is our support. Then you have to wait for it to break out. It might decide to break out through the resistance. It might decide to break out through the support. If it breaks out through the support, you wait for a retest. If what's it called? If it breaks out number one, then you wait for a retest. If you see anything like retest there, then you look for what? Short. But if it breaks out through resistance, notice if it breaks out through resistance, you wait for a retest, then look for long. You see, here you have two options. You just have to wait for it to break out the line, any line, being resistance or support. If we break out through support, you look for short. If you break out through resistance, you look for long. I hope you understand. So now let's continue. They said, let's read from the beginning. They say, whenever such a pattern is formed in the chart, then we have to take the high and low on the horizontal line. You know what I'm trying to say? High and low in the horizontal line, which means add supports and resistance and wait for the price to exist the horizontal line. Either the price will go down or else up. Upside. That's what I'm trying to say. So as soon as the candle come out of the resistance, then we have to wait for a retest. You see what I'm trying to say? If it breaks out through the resistance, wait for a retest and look for long. Then I say, and as soon as a retest happen after a bullish candle, you have to enter as explained to you above. Then I say in A, we confirm that yes, we have a bullish momentum can be found, and we enter on B. You see what they're trying to say in essence, I've already explained it. If what's it called? If it breaks out through resistance, you enter through the resistance. You what's it called? You long it. You just have to any place it breaks out, you just have to wait for a retest, then set your entry in that place. If it breaks out through the support is this now. If it breaks out through support, this is the support line here. If it breaks out something like this, you might decide to let me see, breaks out. Sorry. You might decide to let me see breaks out of this line and give a retest, then start coming down. You look for short. If it breaks out through resistance, as seen here, you look for long. As simple as that. You know what I'm trying to say? So now that's it for this strategy. As simple as that. All this strategy, that's why I said, what was it called? That's why I said, just have the basics. Have the basics. Have the basic idea. You know what I'm trying to say? It's just like school now. You go to school. You know what I'm trying to say? You learn ABCD. If you learn ABCD and you learn, let me say, some of the vowel and consonant sounds, if you take textbook you want to read now, it's not like you don't learn like some words, you don't learn them in school. You just form them because based on the basic knowledge you have. So that's it for cryptocurrency. If you have the basic knowledge on this, you can let me say go to several let me say what was it called social medias, or you can lay your hand on many PDFs or videos. So they'll just be explaining it for you and you'll be grabbing. You know what I'm trying to say? You'll be grabbing because because you know what they're saying. Just imagine now you went, let me say you go to what's it called, you don't have any basic idea, and you just go to all those YouTubers. Those YouTubers don't waste their time to explain this support and resistance. Right? They'll just say if the line hits support, you just be hearing words, you don't even know their meaning. But now if you have the basic knowledge, since you have the basic knowledge, you can go elsewhere. You understand what I'm trying to say? Being YouTube, being what's it called, Twitter, we have different places. You can learn all these things, or you can go to what's it called? Google some PDFs. If you are reading, you already have knowledge, you just be grabbing. That's how to learn. Like I said earlier, all these things, nobody teach me technical analysis. I've not paid for any class for technical analysis before. No, I learned it by myself. I hustle for it. That's what I'm trying to say. I hustle for it. So that's it. And good thing about this thing, if you learn, like I said earlier, if you learn, you can use the knowledge to earn money. In years to come, cryptocurrency is not something that is crashing tomorrow or in the next 10 years. It's the future. So you can teach the nearest future generation and you earn your money. It's just like teaching job. They go to school to learn, and they paid for it. They paid the what was it called school fees in the universities. Then after they are done, they get teaching work or lecturing work, and they pay them. They teach other people to pay. That's how what was it called? This was it called cryptocurrency stuff work. So you just have to let me see, be committed. So let's move on to strategy 7. Okay, they say the pattern we can see in this chart is called what? The flag. The flag pattern. The bullish pattern. You see, like I explained earlier, like I said, I don't even know the strategy is here. I don't know the strategy is here. You see, it's the opposite of this one. This one also the flag pattern, but the bearish one. But this one now we are talking about is the what? Is the bullish one. You see, that's why I said if you have knowledge on these things, if you have knowledge on these things, you don't need to let me say have another mentor or to pay for any class for all these things. You can if you lay your hand, you just lay your let me say just that's why they said if you see somebody have money more than you have more information more than you. You understand sometimes that's just the logic. If someone have money more than you, based on let me see some aspect, you have more information more than you. The information there is the what is the idea. You can have money today if you don't have what's it called information to some certain thing. Believe me, you'll be broke. Let me say in the next few months or some weeks because you don't know how to use the money. If somebody just dash you 10 million today and decide let me say to use your basic knowledge something of wallahi as in that 10 million will not last long. But if you have that 10 million now, let me say meet somebody who will have experience. Let me say you want to go into buying and selling of stuff. You now meet that person who is doing that what they call business currently. Give me some ideas. Give me some steps. Believe me, that person should give you what they call some tactics, some secret about that business. You will go far. So that's how it is. Okay, just have the knowledge. So now let's continue. The latest pattern you can see in the chart is called what? Flag pattern. This is a bullish pattern. You see, a bullish pattern. Whenever such a pattern is formed, you can get good bullish momentum. You see that one they are talking about bearish momentum. If you see that kind of pattern, we'll be seeing something like bearish momentum. They say we can get good bullish momentum. Now we'll enter here only when the price breaks out the previous high. Now that's what I'm trying to say. We only enter when the what price breaks out the previous high. Number one, what you need to note, it must coming up from what's it called an uptrend, which is this. Then I say it must breaks out. When it breaks out, it's not only breaking out, it must breaks out, and when it breaks out, it must breaks what's it called this previous high in this place. That's what I'm trying to say. When it breaks out this previous high, then we'll wait for a retest, and the retest. Note, the retest we are waiting for. That's what I'm trying to say. The retest will take the calculation. Let me explain something. We will take the calculation based on this high, this previous high. I'm coming, let me draw a straight line. We'll take the calculation based on this line. That's what I'm trying to say. Let's see it's going like this. When it goes like this, then the retest must be something like this, not below this line, then up like this. Because the retest must correlate with this what? Sorry. With this previous high here. The main key point here is this previous high. Let's continue. They say here the price what has broken the neckline, but it does not mean that we will buy here. You see, that's what I'm trying to say. Here the price has broken the neckline, but it does not mean that we will buy here. If the price keeps moving below the previous high, the pattern may fail. You see, there are some certain things you need to note when using these strategies. That's what I'm trying to say. But it does not mean that we will buy here. If the price keep moving below the what the previous high, the pattern will fail. So if we want to make a proper entry here, we'll have to wait for the last high to break. You see, that's what I've been explaining. We have to wait for this last high to break. And you see what I'm trying to say, ba? You see what I'm trying to say? The retest must be you draw a line again with this previous high. Then the retest, if it did not retest, or let me say, for example, now let me make some example here. Let's say when it start going up like this, it did not break the previous high. Let me say and give a retest like this. Please and please don't set your enter. Even if you start seeing it like this, start going up, it must break this previous high. Then make a retest, and the retest don't do the calculation based on this arrow here. No, do the calculation based on this straight line here, this horizontal line here. That's what you do your calculation based on. I hope you all understand. So that's what I'm trying to say. They say here the price has broken what the neckline, but it does not mean that we will buy here. If the price keep moving below the previous high, the pattern may fail. If we want to make a proper entry here, we will have to wait for the last high to break. That's it. In the chart, we can see A, B, C candle. Here, we can note that if we enter at A, then our stop loss will get bigger. B becomes a bearish candlestick, a candle. What's it called? B become a bearish candle. C become a bullish what? Candle. So advisable now. If you want to enter, enter at C. Because normally if you want to enter at A, your stop loss will be bigger and your profit will be less. If the trade, what's it called, wants to start going on your own way, the profit will be less. Will be what? No, sorry. If you want to enter, enter at C. That's what I'm trying to say. If you want to enter, enter at C. And if you want to set your stop loss now, set it something below here. Something below here like this. That's where to look for stop loss. Or if advisable self, you can use set your stop loss. Sorry, it's too low. Set your stop loss immediately after this line here. You can set your stop loss here. You know what I'm trying to say. So as simple as this, I think that's the trading strategy we have here. The next topic is chart pattern, which I'm going to explain that in our next class. So now you can either, what's it called? If you want to find, like I said, we have different what's it called, trading strategy. If you want to find more trading strategy, you can you can go to TikTok. I normally use TikTok. You see all those videos you can see all those, let me see, white people making. You can actually grab one or two from them. You can use TikTok. If you can use your social media well, you won't waste your data. Yeah, that's what I want to say. You can use TikTok. You can use what? Instagram. You can use what? The Google. Where I don't normally find information when about trading is Facebook. Yeah, because I find, let me see, Facebook less what's equal. So where I normally find my information, you see Twitter. So you can just Google some of the trading strategy with this idea you have now. I don't think there's any strategy that what's it called will you find it difficult to interpret and understand it by your own self. And if you have any strategy you have and you don't understand, you can actually send it to me for me to explain it for you. You know what I'm trying to say. So these are some of the trading strategies I use on a daily basis. I normally use them on a daily basis. That's what I'm trying to say. And you can also form your own trading strategy, like I said. You can also form your own what trading strategy, like I said. It's people that formed this based on the previous. Let me see, somebody used this pattern before. Let me see, this is published, and people like us to see it. Maybe he used it once and see that it worked out. He used it twice, it worked out thrice, it worked out fourth. Maybe he used like 10 to 15 times, and I say, this thing is actually working out. This is my trading strategy. And he picked a name similar to what, let me say, the structure of the strategy, and just pick a name and put for it. Start publishing it. You see, these are people's trading strategies. So you can also form your own, or you can use their own if you see that their own works for you. So that's it. So thank you for the class.